This video assumes that you already know how a backdoor Roth IRA contribution works, but what I'm going to do is explain how you do a backdoor Roth IRA contribution for last year. You might know that before your tax returns are due, usually on April 15th, in that year, you can contribute to an IRA for the previous year. But what happens if you want to do that with a backdoor Roth IRA? Likewise, what if you want to do that contribution for last year and one for this year, all in the same year? When doing a routine backdoor Roth IRA contribution in the middle of any given year, you make a non-deductible contribution to your traditional IRA. Then you do a conversion from your traditional IRA to your Roth IRA, and there's no income limit check on this operation. When you go to file your taxes, your tax return will include Form 8606 for the year in question. So let's say you do this backdoor Roth operation, or rather two operations. When you go to prepare your tax return for this year, which is done before April 15th of the next year, you fill out Form 8606, or at least your accountant or your tax software will fill out Form 8606 for the tax year in question. And it includes Part 1, non-deductible contribution to traditional IRAs, and Part 2, conversions from traditional to Roth IRAs. So to simplify this, you have a Form 8606 for the year in question, which contains both, let's say, for example, $5,000 non-deductible contribution to the traditional IRA, as well as a $5,000 conversion to the Roth IRA. And of course, there's going to be caveats. What if the balance grew before you did the conversion? That's not what this video is about. What this video is about is what if you want to make a contribution for last year and you want it to be a backdoor Roth contribution? So what we're talking about here is we're in the time between January 1st and tax day, usually April 15th, of a given year. But we never made an IRA contribution for last year. We want to take advantage of the fact that the government allows us to make contributions for last year to our IRAs up until tax day. So the actual operations, the contribution to the traditional IRA and the conversion from traditional to Roth IRA happen this year. But the IRS lets you treat it as if the contribution happened last year. And it counts against your contribution limit, the amount you're allowed to contribute for last year. But what this all hinges on is just because you're allowed to make a contribution that happens during this calendar year and count it for last calendar year, there is no such provision to make a conversion to Roth IRA and have it backdated and have it count as if it happened last year. So you can still do a backdoor Roth IRA for last year, but what it involves is a contribution, a non-deductible contribution to the traditional IRA, which is effective last year, but that the conversion happens in this calendar year. So you always got to remember the backdoor Roth IRA is not a single operation. It's a name we give to two separate operations, the non-deductible contribution and the conversion to Roth. Only one of those can we treat as if it happened last year. But that's okay. There's really no downside to it. It's just the complexity of filing your tax returns. If you look at the Form 8606, which is part of your tax return, now you have these two operations take place on two different years, Form 8606. The contribution, the non-deductible contribution that you made effectively, or as if it were made last year, happens on last year's tax return. So again, in time, we're somewhere in this time between January and April. You're preparing last year's tax return. You need to include that non-deductible contribution on last year's Form 8606. But the conversion, even though you do them on the same day or the same week, you make your non-deductible contribution on February 17th and you convert it to Roth on February 21st. That first part goes on last year's tax return, and the conversion from traditional IRA to Roth IRA happens in this year and therefore gets put on this year's tax return, which is, of course, the tax return that you're going to be preparing the following winter. So hopefully you can guess what this will mean if you want to do a backdoor Roth IRA contribution for both last year and this year. Maybe it's February, you're preparing your tax return, you've never done an IRA contribution before, you need to do the backdoor method because you exceed the income limits, and you want to do it for both last year and this year. So whatever day it is, sometime in this window, you make, let's say, a $5,000 contribution to last year's IRA and a $5,000 contribution to this year's IRA. And once those are settled, you convert them both to your Roth IRA. As you might guess, this contribution has to go on last year's tax return, but this contribution to your current year IRA goes on this year's tax return, as well as the conversion of all the money, both the money that was credited to last year's contribution, as well as the money for this year's contribution. If we look at it on how our Form 8606 will be laid out, you'll have last year's contribution, non-deductible contribution to a TIRA, on the tax return that you're preparing right now to be reported this April for last year's taxes. But then you're also making this year's contribution and a conversion of the full balance to Roth. All of this stuff effectively happens this year, which goes on this year's tax return, which of course you're preparing early next year. Now, Form 8606 has a lot of complexity to account for all the caveats. What if you have leftover non-deductible money in your traditional IRA from previous years? What if you had gains or earnings inside your IRA before you convert it to Roth? If you want more information on how to fill out Form 8606, I do have another video that walks through it in more detail for a backdoor Roth conversion.